Imagine a jobs market that's not as strong as you thought. A revelation that could change everything. The latest U.S. Payrolls benchmark revision estimate has just dropped. And it's a bombshell. The labor market is weaker than previously thought, with 911,000 fewer jobs created in the 12 months through March than initially estimated. But here's where it gets really interesting. This downward revision comes hot on the heels of a dismal August nonfarm payrolls report, which showed job growth almost grinding to a halt. And this is the part most people miss. The job market was already stalling before President Donald Trump's tariffs on imports kicked in. So what's behind this revision? The answer lies in the birth-death model, a method used by the Bureau of Labor Statistics, BLS, to estimate job gains and losses due to companies opening or closing. It seems this model has been prone to errors, leading to an overestimation of job growth. But don't just take our word for it. Economists at Goldman Sachs agree that the labor market has softened, although they think the revision estimate might be too extreme. They point out that the quarterly census of employment and wages, QCEW data, which the BLS uses to benchmark its estimates, can be prone to upward revisions and might struggle to account for unauthorized immigrants. So what does this mean for the average American? For starters, it implies that labor market momentum is being lost from a weaker position than originally thought, according to James Knightley, chief international economist at ING. The labor market has also been pressured by the White House's immigration crackdown and a shift towards artificial intelligence and automation, which is curbing demand for workers. Now, you might be wondering how this affects specific industries. Well, the revision estimate suggests that leisure and hospitality employment could be revised down by 176,000 jobs, while trade, transportation, and utilities payrolls might be slashed by 226,000 positions. Professional and business services employment could be reduced by 158,000 jobs, and manufacturing employment might be lowered by 95,000 jobs. But here's the thing. These numbers are not set in stone. The final benchmark revision will be released in February, and it could paint a very different picture. And this is where it gets controversial. Some economists, like those at Goldman Sachs, think the revision estimate is too extreme, while others argue that it's a necessary correction to ensure the accuracy of labor market data. So, we want to hear from you. Do you think the labor market is weaker than previously thought? Or is this revision estimate an overcorrection? Share your thoughts in the comments below. As the U.S. financial markets remain largely unmoved by the report, economists continue to expect the Federal Reserve to cut interest rates next Wednesday. But with consumer price data expected to show inflation pressures building in August, the estimated revisions could fan fears of stagflation. The monthly employment report is based on data derived from the Current Employment Statistics (CES) program, which surveys about 121,000 businesses and government agencies. The QCEW data, on the other hand, is derived from reports by employers to the state unemployment insurance programs and represents about 95% of total employment. In a surprising twist, the BLS has faced criticism from the White House, with Labor Secretary Lori Chavez DeRaymer blaming the estimated revision on a failure by leaders at the statistical agency to improve their practices. But the BLS, like other statistical agencies, has suffered from years of inadequate funding under both Democratic and Republican administrations. As Elise Gould, a senior economist at the Economic Policy Institute, notes, any political retaliation due to the release will harm the ability for the BLS to provide timely and unbiased statistics. So, what's next? The National Association for Business Economics has urged policymakers, business leaders, and the economics community to stand with the BLS and ensure that America's statistics remain accurate, independent, and trusted worldwide. As the debate rages on, one thing is clear: the labor market is at a crossroads, and it's time to take a closer look at the numbers. But here's the question. Are we looking at a minor correction or a major turning point in the labor market? The answer, much like the future of the U.S. economy, remains uncertain.